Hello.
Hi, Mank.
I'm audible?
Yeah. Am I audible?
Yeah.
Can you guys see me?
I think
Hello.
there's some issue with the camera, if you can check. Yeah, it's fine now.
Yeah.
Okay. Good morning, everyone. Welcome to Finance Committee's first session for first years. Today we have with us Aakash Raichand, who has a BCom honors from Calcutta University. He's a CFA level 3 candidate, and he also has an MBA from NMIMS Mumbai. He has been teaching since the past 8 years out of sheer passion and commitment towards finance and strategy. He is currently absorbed as a senior credit risk analyst at Citibank for European banks. He is also actively involved in his family's pharmaceutical and raw material export house business, focusing on strategy and business expansion. He has been training students in the finance domain of namely CFA, FRM, equity research, and financial modeling, among other courses. From a practical standpoint, to bridge the gap between theory and practical life, in order for students to understand the market dynamics and industry expectations. With this, I hand it over to you, Akash.
Thanks, man. Thanks a lot for the warm welcome. So, Mank and I have known each other for quite some time now, almost 2 years. So, Mank interned with me. I think his first internship was with me. And I hope he's learned from uh, interactions with me. Anyways, just to get the ball rolling, I have just prepared a short PPT. Okay. The topic under consideration is financial careers. What are the financial paths that students like you can choose? So I've just broken down the PPT into 6 broad areas. Okay, there may be n number of options, but all the finance career options can be absorbed in either one of these 6 categories. The way I structured this presentation or this talk is first 15-20 minutes I'll speak. I'll talk about what each of these following programs are, what are the skill sets required, what kind of companies do come on campuses, and which companies you can try to reach outside campus, and what are the opportunities available in each of these courses. After these 15-20 minutes, we can have one-to-one interaction. You guys can mute yourself, or you can post your questions in the chat box, and I'll be more than happy to answer those questions. Just diving deep, the most glamorous first option is investment banking. So primarily investment banking, if you understand, it just deals with 2 aspects. For example, Reliance Industries needs to raise capital. So it will either raise capital by debt or equity, and then it will invest those capital or that capital into, let's say, a project, into a factory, or so on and so forth. So from that perspective, appoints someone known as an investment banking firm or an investment banker. So that company or those set of people, for Reliance, it would be a set of people, such a mega project. But generally, it's a team, small team, or it can be a big team, depending on the ticket size. They will help in terms of raising that capital and or in terms of deploying that capital as well. So broadly, investment bankers try to use the IPO markets, the capital markets, the debt markets in order to raise that capital and help the firm that wants to utilize those capital resources. So risk management, portfolio management, usage of money around the self as well as the client's money. These are primary roles of an investment banker. There are many a times if we hear that Goldman Sachs, JP Morgan, they also invest their own money. For example, they want to invest into leading fintech companies. For example, they might have invested into Nykaa, Paytm from an Indian context. So from that perspective, also investment bankers do deploy their capital. So either it can be a client's money or it can be their own money. So the key skill sets required are research. For example, if I am Reliance, I reach out to JP Morgan and I need to raise capital, let's say to invest into geo, or to invest into a pharma business, or to invest into a retail business. So I clearly need to understand, research about that particular industry. And before that industry also, I need to understand in which economy a particular company operates. For example, from our context, I said Reliance, but there can be a company in Taiwan that needs to raise money. There can be someone in, let's say, Philippines that needs to raise money. So now JP Morgan cannot say that, I am based out of India or I am based out of US, so I cannot help someone from Taiwan. Obviously, they'll have people and offices in Taiwan and so on and so forth. So what I'm primarily trying to say is they need to understand the economy in which the entire company operates, where that particular activity or transaction needs to take place. The industry, for example, they're raising money, the company is raising money for an expansion into the hotel business, into the pharma business, into the retail business, and so on and so forth. So an entire understanding of the economy, industry, company needs to be done. Next is maths needs to be extremely, extremely strong. By maths, I mean calculations. Okay, so you guys are tech people. I'm sure that's your skill set forte. But here we are talking about extensive use of Excel, extensive use of financial models, valuations, and so on and so forth. Just to again give you an example, if Reliance needs to raise 1,000 crore rupees, what would be the pricing of that IPO? What would be the pricing of that issuance that needs to be decided? Should it be at 100 rupees, 1,000 rupees, 10,000 rupees per share, or so on and so forth? That is point one. On the other hand, if it's trying to raise money by the debt route, we have equity as well as debt route. So what should be the pricing? What should be the yield on that particular debt? Should it be 6%, 7%, 8%, 10%, whatever, depending on the riskiness of the company, depending on what purpose that particular fund is going to be utilized for, so on and so forth. So that calculation, that valuation, that analysis, that quantitative understanding needs to be extremely, extremely key. Next is global understanding. So the world is getting much more global. By global, I mean a combination of global as well as local, because a lot of, in fact, every company these days wants to export. So the entire globe is basically their playing field. So as a result, the investment banker needs to understand, for example, whether I need to raise money via the Indian economy, or if the pricing is suitable. Can I raise money via the Philippines market or via the Jordan market, and so on and so forth. So an entire understanding of the global macro environment is extremely, extremely key. Next is, so just to also digress a bit, there are industry people who will tell you something, but I can just tell you one key thing, that there is nothing known as finance or marketing or HR for that matter. At the end, the key skill set required for succeeding in any of these fields, after an MBA or post graduation or directly after your graduation program, is sales. If you are not a good salesperson, if you are not a good negotiator, if you cannot develop business, it will be extremely, extremely difficult for you to crack into these domains, because after 2, 3, 5 years, you will not be preparing the financial models. You will be meeting with the clients, you will be pitching them the business idea that you can help them raise money at a lower cost. Because at the end, there is Morgan Stanley, there is Goldman Sachs, there is JP Morgan. Reliance has the option of all these basket of investors or basket of investment bankers. So who will pitch that, that I can raise money, I can help you at the cheapest cost possible? So as a result, the sales and negotiation skill, I would say, is, I've mentioned it as the 0.4 skill, but I think that is the key skill that is extremely, extremely important. Because 3 years, 5 years down the line in that particular profile, you would not want to, prepare reports, prepare financial models, and so on and so forth. So that is a key skill set that is required. The top recruiters in the country, the big IB firms, or the way we call is bulge bracket IB firms, Goldman Sachs, Morgan Stanley, and JP Morgan. Those are, global players as well. And as a result, they handle transactions. So basically, the way investment bank operates is that the type of transactions you get, the bulge bracket means they get bigger ticket deal size. For example, 10,000 crores, $1 million, $2 million, $5 million, and so on and so forth. On the other hand, the smaller IB firms, such as a Kotak IB in India, Kotak IB is, I think, one of the top 3 IB firms in India. Amazing place to work for. So those players handle small ticket size, 100 crores, 200 crores, 500 crores deal sizes. So the difference is nothing. It's just the quality of transactions that these people get. Also, just to tell you that when you handle 5,000 crores, 10,000 crores ticket size transaction, it is not just a small team. There will be sub teams in that particular team. So when you are hired in Goldman Sachs, you will be absorbed as one of the, one of the analysts. Okay, that's the more junior position that you guys will be eyeing for in one of those teams if you end up in the bulge bracket IB firms. Next is equity research. In simple parlance, it is basically your stock analysis. Whether you should invest in Reliance, whether you should invest in Paytm, whether you should invest in Zomato, or whether you should invest in companies such as an Asian Paints or a Berger Paints, you need to understand basically the investment analysis, the investment thesis, investment hypothesis between this business. Now, equities can be of both sided, in the sense that you're trying to, buy a position into an IPO. For example, last couple of months, we've seen a plethora of IPOs. Paytm, Nykaa, Policy Bazaar is about to come, LIC is about to come. So those things are primary market. So you can either invest into those IPOs, or you can buy and sell, securities on a regular basis via the secondary markets on the NSE and BSE, specifically in India. So here you need to understand that this universe is a listed universe. For example, my father's company, that's a private limited company. You cannot directly invest into that company. Okay, there is different routes, and we'll discuss that under the private equity section. But if you need to invest into companies such as, Reliance and so on and so forth, it's more of a listed universe game that you need to play on. Now, under equity research, there are two types of research: buy side and sell side. By buy side, I mean you're researching Reliance for your own purpose. For example, Goldman Sachs has $100 billion cash reserve or a securities portfolio or a mandate that it needs to invest $100 million every year. So for that matter, Goldman Sachs will research on companies so that it can invest its own corpus into those companies. So that research is known as a buy side research, that is for self. If I am researching on Asian Paints for my own self, that is known as buy side. On the other hand, there is something known as sell side research. Basically, I research about companies, prepare reports and everything, and sell that research to you so that you can take an investment call on that. So both buy side and sell side. From a toughness perspective, buy side is extremely difficult to get into, because the space is fairly stagnant, in the sense that there are around 500 odd positions in India only. No one leaves that position because it's in the top companies. Basically, you're investing ICICI Bank's money into the capital market. So that's a big position, big ask. So as a result, the positions are limited. Sell side, there are approximately 5,000 odd positions every year that open up. People leave, people shift to other domains. So as a result, sell side is much more easier to enter into as compared to a buy side. The key skill sets required are, again, common. Some are common to investment banking, but the level or the intensity is extremely less as compared to investment banking. Because investment banking, you are going deep into a particular company. In a particular year, you will handle 5, 7, 10 transactions. On the other hand, a typical equity research analyst covers approximately around 30-35 odd stocks in a particular calendar year. So as a result, the depth of analysis reduces as compared to investment banking. In no way I'm saying you have to work less or so on, but I'm just comparing it to an investment banking standpoint so that you understand the intensities, understand the expectations from the particular role. You have to have an understanding of the equity markets. So recently, if you guys follow the news, the Fed is expected to hike the interest rates from approximately 0.25% to approximately 2% in the next 2 years. So as a result, every quarter when the Fed meets, the Fed is the let's say the SEBI of India, the RBI of India. So when the Fed meets every quarter, it needs to decide whether it needs to keep the rates constant or not, whether it needs to increase the rates or not. So as a result, you need to have an understanding what that rate impact will be on the equity markets. So the last 2-3 days, the equity markets have fallen. And one of the reasons is the expectations that the rates will increase. From an equity research perspective, you have to understand Excel a lot. Your 50% odd work is on Excel. So as a result, you have to understand Excel, and I would not just say Excel, advanced Excel, all the different functions of Excel that need to be at your fingertips. In fact, excuse me, I remember when I used to interview for equity research, companies positions, on the interview itself, they used to ask me that, what will this function do, or tell me how do you do this with this particular function, and they wanted a reaction, a verbal reaction on those skill sets. So as a result, that advanced Excel needs to be at your fingertips. Next is writing skills. This may sound very simple, but the point is, think from a sell-side equity research analyst. There is one report of 6 pages, 8 pages, 10 pages, 20 pages, whatever, depending on the intensity and depending on the sophistication of the audience. The 20-page report you generally charge around 2 lakh, 3 lakh rupees. In fact, I remember at ICICI Bank, there was an assignment given to one of the big 4 companies where they had to prepare a research report on the shoe market. Okay, the shoe market, the footwear market. So as a result, it was a 40 odd page this document, and I think one of the big 4s charged around 50 lakh rupees to ICICI Bank for that. So obviously, for that 50-page report, it needs to be extremely crisp. It needs to be clean, the formatting, the writing style. It has to be extremely, extremely poised so that you can charge and command that premium pricing from the customers. So from that perspective, writing skills is one of the key skill set in terms of the sell side research. Buy side, not so much. Obviously, you need to prepare research reports, but again, I'm talking from a comparison perspective. The top recruiters in the country, all the mutual fund houses, so approximately there are 45 odd mutual funds in the country, all of them hire for equity research positions. The space is extremely limited because no one generally leaves the position. If, for example, I'm handling the telecom sector, after 5 years, 7 years, the mutual fund rotates me, let's say, into the pharma space, into the FMCG space, and so on and so forth. So typically in the lifespan of 20 odd years, equity research analyst, a good equity research analyst, handles around 4 odd sectors at max. 4 odd sectors. He becomes a champion, he becomes a rock star in those 4 odd sectors. So all the mutual funds, you name it, Motilal Oswal, one of the premium broking houses in the country, UBS, JP Morgan, all these hire for equity research analyst. The starting package is approximately 8 odd lakhs. There may be exceptions, but if I talk with a 90% interval level, it will approximately, it ranges between 8 odd lakhs, 8 to 10 odd lakhs after your graduation. After your MBA also, it will range around 12 to 15 odd lakhs unless you are from an A, B or C. Next is credit research. Equity markets and bond markets, there are 2 types of capital markets, right? So equity and bond. So earlier we talked about equity markets. Now we'll move on to the bond markets. So as I said, my first example, Reliance needs to raise money, the 10,000 crore rupees. It can either raise money by equity or it can raise money by debt. So that debt forms a part of credit research. I need to understand the credit worthiness of Reliance, that it is borrowing that money, okay, whether or not Reliance will be able to repay that money. Equity money need not be repaid, because instead of that 10,000 crore rupees, I'm exchanging a share in Reliance. But from a debt perspective, if I borrow 10,000 crore rupees, I need to kind of pay an interest. The interest is known as coupon, okay, in credit language or fixed income language. That coupon needs to be paid, let's say for 5 years, and at the end of 5 years, that 10,000 crore also needs to be paid. So just to take random numbers, if the interest rate at which JP Morgan helped Reliance to raise 10,000 crores is 10%, okay. Approximately corporate rates in India are around 8 to 10 odd percent, depending on the corporate. So it can go up to 15 odd percent, but good AAA rated corporates are around 8 to 10 odd percent. So 10,000 crore rupees. So every year Reliance needs to pay 10%, 1,000 crores as an interest. And at the end of 5 years, it can pay the 10,000 crores. Now, there are a lot of nuances and structures that, every year also some part of the principal can be paid and so on and so forth. So I won't dive deep, but that's the basic structure of a debt repayment. Now, as a credit research analyst, I need to understand that what is the likelihood that Reliance can default on that particular 10,000 crore debt that it has taken. That is where credit research comes into picture. It is more of a qualitative analysis than a quantitative analysis. So if I can just on a scale, I can say that where equity research ends, because equity research is more of maths, more of quantitative skills. Obviously credit also requires that, and so on and so forth. There is a lot of credit research modeling that goes on, but where equity research ends, I would say credit research begins. It is much more involved. You need to understand the quality of the management. You need to understand the probability of default. You need to understand the likelihood of any adverse events that is happening. That is something that you cannot model into an Excel. Obviously there is modeling, there is credit research models and everything that are prepared, but it is much more qualitative than quantitative in nature, again relative to equity research. The key skill sets required are broadly same. However, instead of equity markets, you will have to have an understanding of the debt markets going ahead. The top recruiters in the country, I can classify them into two categories. The rating agencies such as an S&P, Moody's outside India. In India, we have CRISIL, ICRA, and CARE. These are the top three rating agencies. We also have two other rating agencies, Brickwork and Acuity. Okay, Acuite or Acuity, I'm not sure. ACUITE. I don't know how to pronounce it properly, but those are 5 odd rating agencies in India that really hire for credit research. Apart from that, all domestic and foreign banks hire. And I can say that because I worked in one of the top, private banks in India, as well as I'm working for the top foreign bank globally, ICICI and Citibank. So basically, I have, last 3 years, I have been a credit person. So I analyze when ICICI Bank or Citibank gives a loan to you, me, or let's say Reliance Industry. At the end, it's giving a loan, it's giving a facility to these entities or those individuals. I need to analyze what is the likelihood of default, what is the likelihood that the person or entity will default in terms of paying that loan. So again, from an equity research analogy perspective, I can say that domestic bank and foreign banks may jo aap research karoge, that will be more of a buy side thing, because you will not sell that research report to anything. But rating agencies prepare these research reports so that other agencies, other entities buy these research reports, primarily banks. For example, banks do their own research as well and rely on the ratings and analysis of rating agencies to take an investment decisions, whether or not to grant loan to a particular individual or an entity. Next comes private equity and venture capital. Yeah, just to tell you one thing, that credit research is paid little less in India as compared to equity research, because the bond markets in India are not that developed. The equity markets are much more developed, but the bond markets are not that developed in India. However, if you see globally, the bond market size is multiple times that of the equity market size. The bond markets are much more developed across the globe than in India, but trends are changing. And I'm sure that in the next decade or so, the bond markets will also emerge in India. Typical salaries are around 6 to 8 lakhs from a credit research analyst perspective. And the way you move up the ladder is in terms of you either switch into equity research, or you move on to financial consulting, which we'll discuss as the last career option. This is one of the most sought after jobs, private equity, venture capital. Basically, so in short, if I can tell you, I'm sure you guys have watched Shark Tank, okay? India as well as the abroad version. That in simple parlance is private equity and venture capital. Basically, they invest into emerging and early stage companies so that they try to help them, they try to scale those companies, they try to understand the nuances and help in terms of scaling that business opportunity. Sometimes it remains private, sometimes they also help in terms of taking that business opportunity from a private hands to an IPO. For example, Paytm to last year, it was a private company. It had funding from Sequoia, it had funding from all the top, VCP firms in the country as well as abroad. But now they took their stake, they helped Paytm in order to get public. So that entire route is also one way. Or the second way is you help it grow, but the structure of the company remains as a private company itself. The key skill set required here is negotiation and scale. So as you must have seen on the series, it's more of a negotiation skill. You need to obviously understand the business one. You need to provide insights as to how you will help that business grow 8x, 10x, 20x, for example, and get a return on your capital, get a multiple on your capital. You need to negotiate what stake you need to invest. So from that perspective, valuations come into play a lot. Obviously, the Shark Tank show that we all see, that does not show how valuations and everything are done. But trust me, guys, that every pitch that they have shown as 15 minutes, it is actually 1-2 hours pitch. After that, in real life, they do due diligence, and approximately only 30-35% of the deals on Shark Tank actually materialize. And real life also, there are hundreds of hours spent with the particular private equity or venture capital firm in order for the company to take an investment and have that grow. So basically, they invest, let's say, 100 rupees, and they try to make that 100 rupees 1,000 rupees, 10,000 rupees, and their stake and their value grows. Networking is extremely key, because you need to understand how you will help scale the business. Negotiation skills, attention to detail, those are the key skill sets that are required in private equity. Extremely low probability that a person directly out of college or an MBA college gets into private equity, unless you are from the top 3 colleges in the country, top 5 colleges in the country. After your MBA program, it is extremely difficult to get a PEVC role. The starting package is around 30-35 odd lakhs. So if someone is paying you that niche, they'll expect 10x more than the other roles that I discussed. So PEVC, extremely closed knit group. There are hardly any attritions in there. And once you get absorbed, you are there for life. So you try to become a partner into that particular PEVC firm. Top recruiters in the country are Matrix Partners, Bloom Ventures, and Sequoia. Sequoia is a global name now. Other companies also invest, such as Tiger Global and so on and so forth. Those also recruit. But directly out of your graduation, very difficult that you'll get a PEVC profile. Extremely difficult, unless those companies, your PCL invites those companies to campus. It is extremely difficult to get these roles directly outside of your campus. There are 2 other profiles, such as corporate banking and financial consulting. Corporate banking basically means it's again a sales role. It's a financial sales role. Basically, right out of MBA colleges, these big bulge banks, private as well as public sector banks. Not public sector banks so more, you have your separate entrance exam for those players or those entities. But private sector banks, they hire people out of your MBA colleges in order as relationship managers. So if I can just digress and tell you the structure of a bank. In banks, from a corporate perspective, you have the relationship team, you have the risk team, and you have the treasury team. These are the only 3 functions in a corporate banking profile. I'm leaving out retail. I'm not sure anyone intends to get into retail banking. I have not come across anyone out of college or MBA सोचता है मैं तो branch manager बनूंगा. I have not seen anyone, so I will not discuss that. But apart from that, from a corporate banking perspective, there are 3 profiles broadly. One is in terms of corporate. One is in terms of the relationship team. The other is the credit and the risk team, which I am a part of, and then there is the treasury team. These 3 are the only profiles into corporate banking. From a finance perspective, credit, risk, as well as treasury, these are the only roles that are finance. The relationship is a sales come finance role. You have to have an understanding of the financial products, and which you have to pitch to your clients and everything. But broadly, it's more of a negotiation skill set, selling skill set required role. So that's more of corporate banking. And finally, financial consulting. This is broadly in terms of, there's a company, for example, you are a part of Reliance, let's say Industries, or let's say you are a part of Samsung, you're a part of, any of these entities. They have a financial team, or a team that handles a corporate finance thing. For example, I need to uh, replace a particular machine. So should I buy that machine or should I rent that machine? Okay, that is a financial decision that you need to take. So that, for that, that can either be in-house, or they can, leave that function to external people. So that comes under financial consulting. Basically, you help the company, you either internally or from an external company, whether or not to, do a certain activity, do a certain transaction or not. That forms a part of your financial consulting profile. So broadly, corporate banking and financial consulting. I've worked with ICICI. I have people in Axis, HDFC. Corporate banking is only these three profiles. If you want to term it as a finance profile. Relationship team, you have your risk and credit team, and then you have your treasury team. Extremely difficult to get into treasury team. Again, very small ticket sized people are there. Uh, I think if the entire corporate banking arm of a bank is 100 odd people, there are only 5, 7 odd people that are a part of the treasury team. So very, very small group, difficult to crack into. But once you crack into that, okay, the career path is much, much more, easier and smoother, because from the treasury function, you ideally move up into investments. Okay, you need to invest the bank's money. Okay, as I said, ICICI bank का आपको money invest करना है. So the treasury is a good route, to land up into that particular profile. And as I said, credit and risk, I've already mentioned those things. And next comes financial consulting, more into, companies, not banks, financial, decisions that need to be taken. That will be a part of financial consulting. So this is it, guys. Thank you for your time, and I am open to any questions that you guys may have.
Yeah, thanks, Akash. It was a great session. There are a few questions which I'll forward, and from there on, if any participant has any questions, you can pitch it directly to Akash right now. So,
You guys can mute, and Mayank, you can read the questions instead of forwarding. I'll try to answer
yeah,
as crisply as possible.
yeah. One of them is, do mutual fund houses come under buy side or sell side of the equity research?
So mutual fund houses come on both. So if you're preparing reports for the purpose of sale, okay, if Motilal Oswal is preparing reports for the purpose of, let's say, selling to someone, that comes under sell side. However, Motilal Oswal also invests money. For example, मैंने Motilal Oswal के कोई fund में पैसा डाला. So the fund manager of Motilal Oswal, that particular fund, needs to decide whether he needs to invest that corpus into Reliance, Asian Paints, HCL, TCS, and so on and so forth. So that will be a part of the buy side research. So it's both of a function. As I said, it's more of a combination thing, but it's both.
All right. And one more we have, do skills like data analysis help while cracking interviews?
Uh, so data analysis, not really, I would say, in the finance realm, because I am not sure that, all the 5, 6 roles that I have mentioned to you, they are the only roles. You talk to any senior, you talk to any of your family members, any role that you say fits into either one of these 6 categories. So data analysis, the only thing I can think of is that if you are investing into a tech-based company, and if you have an idea of data analysis and so on and so forth, so that helps you understand the company, that helps understand the potential of the company, and so on and so forth. And as a result, the investment thesis or investment rationale becomes much, much more clearer. But apart from that, as a core skill set, I doubt that, data analysis or data practitioner courses, support your journey or your career path into the field of finance.
Right. And I think one general question everyone has that you mentioned many skills like Excel and writing skills and amongst others. So how do you prepare for these skills?
Correct. So there are two parts of that preparation, I would say. One is your theoretical knowledge. Okay. You need to understand the different codes, different, functions in the Excel arena. And as a result, try on doing those courses so that you have a theoretical knowledge of, when to use VLOOKUP, when to use a proper function, when to use a min, max, if error, and so on and so forth. So that is one part. But I genuinely believe until unless you keep on applying that, it is extremely difficult. So for that application, I think you guys can do a lot of live projects. Okay, Mayank itself has done a live project internship with me. So you can reach out to companies and do these live projects so that you are honing up your skills. That is one. Secondly, I feel that unless you are given a real life problem, okay, in theory it does not really help, because if you're actually picking up a real life problem, that is interning with a company, working with a company, and so on and so forth, that hones your skill, and that time your mind works, your brain works, and as a result, that is something, over time it develops. That is to your Excel thing. And writing skill is, again, you need to do a lot of reading of earlier research reports to understand the style of writing that is expected out of you. The general reading is a good practice, as always. Your vocabulary increases, your understanding of those terms increases if you're reading financial books. Okay, I personally read Saurabh Mukherjee's books, into the financial domain. Okay, you can do that so that you not only have an understanding of the writing style, but you also have an understanding of the financial markets. So those are 2-3 things that you guys can do for those Excel and writing skills, if I have answered that question.
Right. And another question is, what do you mean by quant and how can we learn about quant?
By quant, I specifically don't mean maths. We are not talking about 10, 12 maths, integration, differentiation. I'm sure you guys are much more qualified than me for that particular skill set. But by maths, I mean you should not be afraid of doing calculations at the back of your mind. You should not be afraid of doing calculations on Excel. Okay, you need to over time develop that. And at the end, specifically if you are into the PEVC space, a lot of mental maths needs to be done. Okay, in terms of arriving at valuation, in terms of arriving at multiples, and so on and so forth. So every time you cannot open a calculator, right? So that is what I mean by quantitative skills. You need to have an understanding of those models, those valuation techniques, those multiples, doing mental maths, and so on and so forth. Because when you're forecasting, for example, I am forecasting Reliance ka growth rate. So where does that growth rate come? It's not a letter, right? I'm saying 7, 8, 9, 10, 11, whatever that percent. At the end, everything is maths, right? So maths to आपको जानना ही पड़ेगा ना. By maths, I mean that. By quantitative skills, I mean those skill sets that you need to be aware of.
Okay. Another question is, how is credit research different from credit and risk sector of corporate banking?
So I'll retrace my steps back and explain credit research. में आपका two profiles है. One is rating agencies and one is corporate banks. Rating agencies, for example, rate the credit worthiness or the probability of default of all the entities that I've mentioned, let's say Reliance, Apple, and so on and so forth, right? Uska kya credit worthiness hai. So they have those elaborate models, analysis, and so on and so forth that goes behind understanding that. That is the work of rating agencies. Again, rating agencies is more of a sell side, because rating agencies don't typically invest into, let's say, Reliance ka bonds when Reliance comes out with an issuance. That is one part of rating agencies. The second part of corporate banking is, I, as a corporate banker, I'm providing facilities, lines, or loans in simple language to Reliance Industries. So I need to understand what is the credit worthiness of Reliance, right? So from that perspective, I will carry out my own due diligence. I will check Reliance's past track record. I will check Reliance's management. I will check Reliance that in the past it might not have taken loan from me. It, let's say, has taken loan from HDFC Bank. It has taken loan from Citibank and so on and so forth. What is the past trajectory of Reliance in terms of paying those loans? Were there any defaults or not? So from that perspective, I need to understand. So that is the two types of profiles under credit research. And Mang, was this the question?
I think this was it. Yeah.
Yeah.
So another is, in which category does risk analyst come? Is it a more of a quantitative role or a qualitative role?
So again, risk comes a part of is under credit research only. As I said, credit research is much more qualitative than quantitative. And again, guys, when I'm saying it's qualitative, I'm not saying that quantitative maths or modeling skills are not required. Excel is required. You fire up your laptop. I think the first second file that you open after your Outlook is an Excel. I'm almost 90% confident of that. Okay, so it is, if that is your bread and butter, okay, आपको maths तो जानना ही पड़ेगा. But at the end, I cannot just analyze Reliance based on those mathematical numbers and quantitative models and so on and so forth. I need to understand if there are any controversies around the management of the company. If Reliance has cash, whether it is investing into unrelated ventures or not. For example, the expertise of just saying Apple is in terms of innovation. If now Apple uses all those surplus cash that it has and enters into, let's say, the FMCG business, will I not be scared? That is something as a risk analyst needs to analyze, and so on and so forth. Whether or not the management is doing what it is supposed to do, whether the board of the directors and the management are independent of each other or not. So those are some qualitative things that you need to understand as a risk analyst. It's much more deeper. Equity research is just models. It is 90-80% models, and the rest is 15-20-30% is your understanding the company. I think the reverse is true for a credit research analyst or a risk analyst from a credit perspective.
Makes sense. So the next one is it easy to switch between finance and consultancy roles?
Ideally, you start with either one of those finance roles that I mentioned, and then you move into financial consulting. Because as a financial consultant, you have experience, let's say, into corporate banking. You have experience on the treasury side. You have experience on the credit side. So you have an understanding of the different financial products, different financial landscape arena. So as a result, as a financial consultant, you have all those experience in your armory. And as a result, that helps you in terms of either your own business in the company that you're working, or you can provide guidance into other companies that approach your firm, and you can provide them financial guidance and financial consulting.
All right. And the next one is, what are some technical side roles on offer, specifically in the corporate banking sector?
I'm not sure what this question means. If someone who asked this can mute and asks the question in a much more elaborate fashion, I'll be more than happy to help out.
I think they're in the meet. Ram, Ashya, if you're willing to clarify what you're trying to ask.
So this time around, like during the placement season, so ICICI visited for the technical side roles, like project management, risk analysis, and so you've already detailed a little bit on that. So could you please elaborate a little more on the specific technical side roles?
Technical side, what do you mean by it? So it visited for risk analysis role. So I explained to you what risk analyst does. So as I said, if I am providing facilities, loans, and term facilities to any entity, be it Reliance, or let's say be it HDFC Bank. Okay, ICICI Bank has lines with other banks as well. Okay, so I need to understand the credit worthiness of those particular entities. So that is risk analysis. That is what the risk person does. That is one. What is your second part to the question?
Yes, so I wanted to ask, is that the only technical side role, like, or is there
As I
anything
said,
else?
from a corporate banking perspective, there are only 3 roles into any bank. One is your relationship side. For example, I am as a relationship manager for Reliance Industries. So Reliance ko koi bhi requirement hai. For example, Reliance needs term loans. It will reach out to me and I will facilitate that. Reliance wants to have the banking of all its employees with ICICI Bank, I will facilitate that. Reliance wants to open a branch overseas, uske liye funding chahiye, uske liye you need to have foreign remittances outside India. Okay, I will do that. So that is the relationship side. The risk side is the relationship वाले बोला कि Reliance को 1,000 crores का lines चाहिए. So I, as a risk analyst, will do the model, do the analysis, and so on and so forth, and say कि 1,000 crores के लिए इतना collateral होना चाहिए, नहीं होना चाहिए. 1,000 नहीं, I can just give 900 crores. 1,000 नहीं, I can just give 700 crores. That is the risk analyst side. And the treasury side is, you need the bank deals with bond markets, invest into different bonds. So that is the bond market. These are the THE in caps bold. These are the only 3 roles in corporate banking. There is no other this thing. I think I've answered that.
Yeah.
Obviously, there are small other roles. For example, someone is into a strategy role, someone is into investor relations, and so on and so forth. That also forms a part of corporate banking. But clearly, from a finance perspective, these are the only 3 roles that are in the corporate banking arena.
All right, so we'll move on with the next question. What is the average salary package in investment banking and financial consulting?
Right out of your graduation, investment bank at an analyst level typically pays around 8 to 10 lakhs. Financial consulting, very difficult straight out of college without any experience, but typically they are paid in the range of 12 to 14 odd lakhs with 2 to 3 years of experience. Again, exceptions are always there. There can be an analyst who gets a 30-40 lakh package, but I always say one thing: exception को देख के अपने rule नहीं बना सकते. So you should never think of those outliers. Always aim for those, but never take a career decision or a career choice based on those particular outliers.
Right. So the next we have is how much is the importance of a POR in the CV for investment banking or equity research role in interviews? I'm guessing this is for
POR
the
as in
positions. POR are positions of responsibility. I think the person asking is referring to POR of societies, clubs, etc.
Okay. I get that. It just shows that you're doing something else. This really helps in more of an investment banking role. So equity research, credit research is more of a back-end role. Investment banking initially is a back-end role, but as you move up the ladder, it becomes a middle office and a front office role. The movies and everything that you guys see, it's more of a front office role based out of US. Okay, so for example, Goldman Sachs also hires from India, right? But no transaction or no front office role exists in India. There may be 2 or 3 positions in India, but there is no front office role in any of the investment banking, bulge bracket investment banking firms in India. Okay, so if you are absorbed into Goldman Sachs, Morgan Stanley, JP Morgan, you will be a back office role. You will support, let's say, the US people in terms of preparing the pitch deck, preparing the analysis, doing the due diligence, and so on and so forth. More of an operational work. So that is something that needs to be extremely clear. So that just shows as a position of responsibility, you have that negotiation skills, you have that networking skills. So that is something that helps into IB to some extent, but I think that is the last thing that's a recruiter would want to see. Okay. Having said that, it obviously adds value. Ceteris paribus, 2 people, one has a position of responsibility, other does not. The other one is favored. Ceteris paribus, which again is a difficult position to achieve, but it just adds little value. There is no value added in terms of an equity research, this thing, a profile for positions of responsibilities.
All right, moving on. I think we have what kind of further education opportunities exist if we wish to end up in the finance industry, MS, MBA, or any other course, and which universities, etc.
I will not be able to comment on the second part, which universities, but I will try to answer the first part of the question to the extent possible. After your graduation, be it you've done a BTech, I've done a BCom, the doors are same. However, someone from a BCom background, with all due respect, has a little of a lap ahead as compared to a BTech, because 3 years we've studied approximately 100 hours of finance related subjects. You might have studied only 10, 20, 30 hours, okay, of finance. So that lap is there. Should not worry about that lap, because after that the opportunities are same. So from a course perspective, there are only two courses. Okay, one is an MBA or one is an MS in finance. In India, MS in finance is not that popular. These are two programs, or should I say not courses, these are two programs that one can do. Apart from there are 3 or 4 certifications that can be done. One is a CFA, one is a FRM, one is a CAIA, Certified Alternate Investment Analyst. That is something, as I said, private equity. CAIA provides an edge, provides guidance into the private equity space. So these are the education opportunities after your graduation.
All right. And can you guide us to the path to clear CFA?
Clear CFA in simple terms, Parlo. There is no other path to clear any exam on the planet. But on a more serious note, CFA is much more of a practical course, in the sense that over time it tries to highlight, because the curriculum changes every other year. It tries to highlight more of recent activities, recent transactions, recent developments into the financial markets, and it gives you a so there are 10 subjects in the CFA program. If I'll just name them: ethics, quants, economics, corporate finance, equities, fixed income, derivatives, alternate investments, portfolio management, and this is one other. Okay, there are 10 odd subjects. Did I mention corporate finance? If not, that is one of those. So these are the 10 subjects. So CFA tries to touch base on all the different, so for example, credit, equity, investment banking, private equity, वो सबको touch base कर देता है, but it does not make you a specialist in any particular field. That is point one. That is where FRM and CIA come into picture. FRM, financial risk management, that is a specialized course dedicated for risk management people, either from a buy side perspective or a sell side perspective. And finally, CIA, Certified Alternate Investment Analyst, that helps you in terms of your private equity and venture capital jobs. However, having said that, no course on a standalone basis can land you into your dream jobs, your negotiation skills, your sales skills, your speaking, your communication, and so on and so forth. These need to be at the top of your game, okay? Because a CFA or an MBA will just help you enter that particular interview room. That is all that a degree does. Okay, it may sound really fancy and everything, but that is the fact of the matter. Okay, into that interview room, there will be only your knowledge, your Excel skills, your communication skills, your networking skills, your sales skills that will help you land the job. So yes, I'm not saying it is less important, the degrees or the courses, because interview tak पहुंचोगे ही नहीं तो showcase कैसे करोगे? It's like the chicken and the egg story. But having said that, your skills, I would say, are much more important.
I guess that wraps up our questions. If anyone has any more questions, can unmute themselves and ask right away.
We have 3 odd minutes. I have another session at 12, so we have 2 odd minutes in case anyone wants to.
For example, a degree in MSc Economics, which is offered by BITS, how much does that have an effect on any of the roles you mentioned? Like, does it actually a plus point, or is it quite rudimentary, not such a main thing?
No. So as I mentioned, when I was talking about all the courses, specifically the first 3 courses, I did mention that you have to have an understanding of the economy, the global perspective. So economics, I would say, is one of the key pillars in finance, because until and unless you have, for example, let's just take an example. I am a global fund manager and I need to invest a corpus. Okay. $100 million corpus. Should I invest in the Brazil market, Philippines market, Indian market, US market? How will I analyze that? I need to analyze those 4 economies. I need to analyze the different factors that affect the economy, the potential growth of those particular economies, and so on and so forth. So from that perspective, economics definitely comes handy. So you need to understand the different economies, different, macroeconomic perspective. If you understand just the macroeconomic perspective, you can make a lot of money in the capital markets. I cannot comment on what courses are offered because I have not seen those courses and their outlines, but I can tell you the importance of economics in terms of finance.
Another thing I wanted to ask was like all of us here are doing our BTech. So say out of college, we enter a finance role and we do not do an MBA. So 2, 3, 4 years down the line, in the finance field only, say we want to switch jobs, how big of a role does the primary degree play? Like, is it just the experience which counts, or will having a BTech as opposed to some other commerce degree be a negative factor for us?
From a graduation perspective, a BTech or a BCom does not make any difference. Maybe as I just mentioned, a 1 or 2 step ahead. I'm not saying steps, but maybe 1%, 2%, 3%. Because of the fact, as a BCom person, I am much more exposed to taxation. I'm much more exposed to costing. I'm much more exposed to financial management. So आप लोग जिस सिर्फ सुने हो, a BCom person को ज़्यादा पता होगा. That is it. Having said that, उसके बाद if someone has done an MBA, he has a full-flown knowledge of all those courses. Every course in an MBA program is taught for 30, 40 hours. So a finance student does typically 15 odd courses, 15 to 18 odd finance courses. So you multiply 18 times 30, 40 hours, that's 600 hours ka theory knowledge, the practical exposure, the internship, the life projects, and so on and so forth. That creates a massive difference. And you like it or not, a graduate is paid much more less in India, by these companies, by the bank, and so on and so forth, even if you are equally qualified. So that degree definitely helps you in terms of your pay scale.
Oh, okay. Thanks a lot.
I think this is it, Mayank.
Yeah. Thank you everyone for joining, and thank you Aakash for clearing so many doubts and having a wonderful session with us.
Thanks a lot, man. Thanks a lot. Appreciate you having me here. I just hope I tried to help everyone to the extent possible. Anyone can reach out in case they have any more doubts. You can be the liaison for that. Okay. Thanks a lot guys for being such a wonderful audience. Please take care and be safe.
Will we be getting recording?
Yeah, the recording for this session will be available on Finance Committee's YouTube channel.